Hey everybody. Good morning. Gonna be a busy day. Rob, Mark, Sergio, Logan, Rex. Good to have everybody. Darren, Don, Dan, Svenborn, Arturo, Pauline, Frank, Amy, Will, General Rush. Good to see you, sir. And Lieutenant Colonel Goose. Good to see you, sir. Glad to have everybody. Welcome to the show. Welcome to the show. Mad, good to see you. Clarence, Roland, Ted. Glad to have everybody. And apparently my headphones are connected once again. All right. Whew. I didn't bring. Let's see. I don't even know. There it is. There it is. I got too many things going on. Got my monster here. Set it off. Rushing around, trying to update my Tesla statistics and get everything in order so we can talk about it. And yeah, I just realized I did not even pull up the Tesla statistics on this computer because I was busy getting them on the other computer. And let's see. It's in Google Sheets. Google, spell Google right.com. Let's see if I can find it. Yes, there it is. We'll pull it over and drop it in the other thing. Oh, not gonna drop. Cool. Love it. Gosh, love it. All right. Whatever. I'll do that in a second. We'll pull it over. All right. All right. How's everybody doing? Back to 50 degrees. It's like a heat wave, right? Yeah, I was leaving the house this morning. I only put on one hoodie. I was I'm telling Kimberly, I was like, yesterday I had yesterday morning I needed, 3 hoodies. I wear 3. And this morning I was like, when I was coming home last night, I was too hot with 3 hoodies on. So I think I'm just gonna wear the one. And it's 41 here this morning. We'll see what happens. It's supposed to be like this is normal temperature for here. Yeah, 70 degree swing. We had the highest earlier in January. We had the highest temperature and the lowest temperature of the year within 48 hours, and it was like almost records both ways. God love it. God love it. And so today's going to be an interesting day. FOMC day, 2 p.m. If you don't know what that means, you better be careful if you're a day trader. Be careful if you're even a swing trader. Be careful. There are significant risks of loss due to the FOMC at 2 p.m. today. Dun, 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 dun. Here is in Knoxville, Tennessee. If you didn't know, that's right there. That ball right there. It's the Sun Sphere from the 1982 World's Fair. The famous, everybody knows, right? The famous Sun Sphere. Anyway. Alrighty. Yeah, let's talk about disclaimer before we do this. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and hopefully entertaining. Are you not entertained? Hey, Major John, good to see you, sir. Good morning. And it is not a recommendation to be buying or selling any financial instruments, so no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. Unless you know what you're doing, follow a system, high probability, you got high confidence in what you're doing. If you're just out there with a stick poking the market, you're gonna get ripped. And we had a big conversation in the Apollo channel yesterday about somebody just blindly going at it. And I do feel bad that, they didn't take the time to sit there and learn it. But, gosh, there's nothing in this market you can just do and follow somebody else's trades. Honestly, if you follow somebody else's trades without understanding what you're up to, you're going to get hit. And if you're in a position where you just want somebody to tell you what buttons to hit, which is kind of what they wrote, that's personal financial advice, and you need to hire and consult a financial advisor and somebody that can tell you what to do. Otherwise, you got to take a vested interest in learning this yourself because, well, The market has this nasty habit of teaching the lesson. If you're not going to go at it knowing that you got to learn the lesson, the market's going to teach you the lesson one way or another, usually by taking a bunch of your money. Ask Wrongemer. He's been really banging at it, but if you get complacent, you get the lesson. So here's the big show today. Right there. That's the first big show. Then we have coming up after the close, we get Tesla, we get Microsoft, we get Meta. It's a loaded situation. And Chris, even Chris right there. And I'm not being mean, Wrongemer. I'm just, Goose can attest to it. Sledge can attest to it. Skags, I know you can too. I mean, I know lots of you have, learned the lesson along the way. And it's what makes us great traders. I mean, Laura probably learned it. And Nikki, I mean, don't blindly follow. Like, period. You gotta take the time to learn this stuff. If you don't learn it, you're destined to get the lesson handed to you. It's usually financially. As my dad says, I have paid for all my educations in my life. We're not talking about schooling. We're talking about education. So you get paid. You learn. You pay for your educations in life, whether it's engineering business, whether it's construction business. Think about it. Everybody out there is just trying to make some of your money into some of their money, one way or another. And whether that's the market, whether that's a guru like me, let's be honest. If you don't trust me, don't buy anything from me. And I sit here and do this show every day to try to build trust with everybody. So, I'm just head on straight up. I'm just a guy. I'm not the God's greatest gift to trading, for heaven's sakes. I make bad decisions. I get it wrong. I lose money. I've spent hundreds of thousands of my family's money getting the lessons handed to me in the market. Thankfully, my parents let me trade their retirement accounts, and my wife and I have agreed that I can manage them, and she's like, just take care of us. I've made epic gains, as much as $856,000 in one single day. And I've had some epic losses, as I've lost $500,000 in a day. I've been put $2 million of Apple stock short overnight in a $5,000 account. I've learned some lessons along the way. You got to be careful. Like the reason I'm always like, you got to be careful. Like this, this thing is rough that we do called trading. And let me pull this. I posted it in Discord yesterday. I'll just pull it. It'll be easier to pull it up off of Discord. Let me pop up here and grab it really quickly. It's about the game. Like, I know some of you have seen this before, but this is a giant game. I'll pull this over. Some of you have seen it, some of you haven't. Welcome to the hardest game in the world. Unfortunately, you're playing with some of the sharpest, fastest, most intelligent, well-informed, stubbornly irrational, and in many cases, unethical minds in the world. You're up against the computer that can go faster than you, those algorithms, right? The trader that has more experience than you. There's always somebody that's been doing this longer, better, that's better at it than you. Always. There's always, who's the best at this? I don't know. The fund, all those hedge funds, all the mutual funds, all the ETF funds, there's funds that have way more money than any of us could ever possibly think of. Think about BlackRock. They've got literally trillions of dollars at this. The insider that has more information than you. As long as if you're an insider, you can actually make trades based on the information you have, and it's not illegal. It becomes illegal when you tell somebody else the information you have and they act on it, and then you get caught. Then it's illegal. Isn't that crazy? It's not insider trading when the Nancy Pelosi makes decisions based on information she has. A lot of people are like, oh, wait a minute, that should be insider trading. It's not technically insider trading. At least not right now. If you're inside a company, you can make decisions. You can make trades. In fact, I have an uncle that worked for an auditor, a very popular auditor in Atlanta that audits public companies. He would make trades all the time based on what he knew their financials were going to be down the road. Then you have others that are going to misinform you. YouTube's full of that. Mainstream media, full of that. You can go out to the internet and find any bull case, bear case for any stock you want. Some of it's, likely, some of it's going to be misinformation. And I found a funny interview with Cramer from almost 15 years ago, Jim Cramer, where he was saying, hey, when I was managing a fund, I would just call up the Wall Street Journal and just tell them some BS, and they would run with it and publish it. That's why you can't believe the news. All right. Even Wall Street Journal published a story based on tips from funds. They're just wrong. Then you have the inner voice, you yourself, that's going to sit there and go, oh my gosh, OMG, 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 OMG. I'm going to lose money. As soon as you get in a trade, it feels like the market's already watching your every move, right? We all feel that way. So leave your dreams of making quick, easy money behind you. The first aim is survival. That's first aim, right there. Number one, you got to survive. If you're going to take big losses, you're not going to survive very long. Your absolute first goal is to learn how to stay in the game. You got to learn how to keep playing, right? If you're ever going to learn how to do this, you're ever going to get good at it, you got to stay in the game. You can only do this by mapping the territory, understanding how the enemy thinks, acts. The enemy. What's the enemy? Everybody else out in the market. By having a solid game plan, you got to know the trades I'm going to do are high probability. All right. This is how I play it. I go for high probability trades. I tend to hunt elephants, big trades that are high probability, and just kind of ignore the rest of the market. You can tell that by the 30 minutes of awesome I did last night, where I was like, meh. Even when I go through the morning, I'm like, this might do this or might do that. And then every now and then I'm like, oh, and I stop. And I'm like, this chart gets my attention. It's not that common. So, and you got to pick your battles very, very carefully. And if you're ready to play, let's go. I've had this for years. I got this, gosh, I've probably had this little thing right here for, I'm going to say close to 15 years. I've had this little thing saved on my computer. I share it with people. You got to be careful. Market will take your money. You're perma-cautious. That's, Ted, it really is. Yeah, praying doesn't help. You got to just go after high probability patterns. Yeah, you can pray if you want, but that's not going to help. Being positive about your trading changes your internal mindset. Knowing you're a winner, really truly knowing you're a winner, not like I tell everybody you're a winner, and then when you go home, I'm like, God, I freaking suck at this. You gotta believe you're good at this all the time, and you got to be careful. The market will take your money. Looks like the market just opened. So we've got this coming up at 2 p.m. That's the big show. We also have some crude oil inventories. That'll be kind of sparky for the oil market potentially coming up right down there. Dun, 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 dun. Then, like I said, we have Tesla, Microsoft, and Meta after the close. So here we go. We're on FOMC day. For those of you that are channel members, your name is in green with the little stars. I am thinking I'll go live just a few minutes before FOMC. We'll hang out. If it's boring, I'll wrap it up. If we actually get some spicy price action, we'll probably keep it going. I'll just chit chat with you. Be real casual like we've done in the past. So there you go. Channel members though. All right. Yeah, I've blown out accounts. I've wiped out, gosh, I've probably zeroed out, I'm going to say 10 accounts at this point. Maybe more than that, but I'm going to say 10 accounts I've zeroed out trading. Now, I buy and far made more money from the markets than I ever lost in those 10 accounts because I kept the accounts small when I was starting out. When I blew them out, I mean, it's a lesson. Like, you learn. Many of you have blown out accounts. It's not fun to admit it. I mean, nobody wants to talk about their failures, but when you do, this is one thing I know Sledge is really strong about. When you reflect on your failures, you know what to not do in the future to get better. If you're, as they say, if you forget history, you're doomed to repeat it. So, you got to be careful. I mean, permacautious, permacareful, that's the name of the game here. What are we doing today? A little bit of a coin flip. We have the target on the upside for the S&P, and we have the target on the downside. We're kind of biased long, having broken out of the downtrend of highs. Slight bias to the upside. I'm probably sitting at like 60-40, 60 up, 40 down. Maybe 55-65. What is that? 55-45. Yeah, 55-45. Sorry. Can't math this morning. Brain starts slow until the monster gets flowing. And so 55-45, 55 up, 45 down. Since we're above all the indications that we're going up, a little bit of a coin flip. It's starting out a little red today. Right there. ES, that was an interesting overnight price action. Hadn't really moved at all. Look right here. For whatever reason, my thing was showing me the wrong time yesterday. When I was talking about the gap up on the restart, it was right Monday, right there. We actually did gap up on the restart right there and then took it right back. And then ground up even into the overnight, wee hours of the morning, 1:30 Eastern time, 2 o'clock Eastern time. Now we're right back down to the 15-minute roadmap line. Can we hold it and break out and go? Or do we crush down, break through that downtrend of highs, and go visit the daily roadmap line? That's the big question. I don't have a solid answer for you today. Quite honestly. 2 p.m. That's the big show. Coming up right out here. 2 p.m. 1400. Move this over to right there. Now, I don't expect them to do anything with the rates today. Oh, close the calls on AEM. I might need to do that. I don't remember which account I have calls in. Better make myself a note. Hold on. I can put this on my calendar to go look for those calls. I'm not sure which account I had that in because I did. Usually I write the account to go on the alert. I trade 20-something accounts, so it can get a little bit much to keep up with sometimes. And come on, load the calendar. This on to go close those AEM calls. There we go. Saved to my calendar. All right. Back to what we were doing. So there's the, I don't know what the reaction is going to be. We cut rates in December. Mortgage rates went up. It wasn't exactly clarity in the market, if you ask me. I mean, we zoom out and look at this on the daily charts. Look what we did since, I mean, we've gone nowhere since the last FOMC. And we topped out right here. And just been kind of, we're almost in the same position. Right? Almost in the same position. Then a few points. Did nothing for a month. 6 weeks, really. And FOMC meetings are roughly every 6 weeks. So we've done nothing for essentially 6 weeks. Just churn, churn, churn. Yeah, this was a nominal higher high. Just barely. Does it count? I don't know. In Q, now here's this one's a little more sour grapes here. That was the high back here. Same December high, lower high. This downtrend off high, we came up, we back tested it fully, but at the same time, we also back tested the high from July, way over here, off the screen. Pull it over just a little bit more. At July high. Been going nowhere since July. How many people thought the market was super bullish the last half of the year? I mean, but really, we've gone nowhere. Nowhere since July right there. It's kind of crazy, right? When you zoom out and think about it. Everybody talks about how bullish 2024 was. But it all happened in the first 6 months. It's all about framing, right? We've been churning sideways for 7 months, essentially. 6 months. Churning, churning, churning. Now, we did break out above the downtrend of highs right there, but we also set a new downtrend of highs right there. So if we're going to be bullish this afternoon, break above that. Going on up here, target 22.7. How does that relate to the QQQ? Same chart, just different, basically divide by 41. 545. All right. There you go. That's how it works. If you've never seen the relationship of NQ and QQQ, basically divide by 41 on an NQ. Roughly. It's not perfect, but it's close. Russell. This one looks a little, like I said, this one's even more sour grapes. So we started with the ES, looks pretty bullish. We go down to the NQ, a little more iffy. Russell, a lot more iffy. Barely above the downtrend. I mean, the downtrend of highs was pretty solid down through there. Broke above, kind of hit our head. If we get above that, we've had that resistance into the 618 right there. Golly, I don't know. That looks like it can roll pretty easy. Oil sitting on the roadmap line. Looked like it might launch yesterday. Coming right back. If we break down below the low yesterday, or 2 days ago, that big red candle, Monday, we break down below that. There's a little resistance right here, and then potential to crush it on down. Now, despite what everybody thinks, drill baby drill is bearish for oil prices. Trump wants lower oil prices, not bullish for oil prices. Trump wants lower oil prices so we can fill back up the Strategic Petroleum Reserve. This might actually be bearish for oil. There's the potential we come down here. Everett, Nikki, all my other oil traders, all my other oil involved people. Think about it. Drill, baby, drill. That's increased supply. That's bearish for oil prices. If we don't hold this and turn higher, we're probably in for a bigger correction on oil. Just be careful. Gold about to actually break it on out here. We are right into, we rejected off that high. See that October high? We rejected off of it right there a few days ago, last Friday. If we can get through it, possibly come on up here to the target I've had up here for freaking forever, right around 2,900. Love to see it. Love to see it. Bitcoin, don't spook it. Looks a lot like ES. We need to get some continuation. We need it. Ethereum, that may get one more flush here. Might flush it down right there. Might and might. Dollar, little little reprieve after that big drop. Kind of expecting a 618 retrace, honestly. We don't really trade the dollar, but for those of you that trade other stuff, we have resistance right in this zone right there at the 618. Might see the dollar rally up to that level, right around that 108.90, and then take another leg down. That would be kind of what I expect there. NKD still being soft. Did hold a higher low at this point. Respecting the roadmap line. I like it. We rallied up. We came back down. That big red candle corresponded with the flush on Monday. I still believe it was more about instability in global liquidity than I do anything to do with DeepSeek, AI, bullcrap. I think that's, everybody loves to hate on China. It had more to do about global liquidity and Japanese yen and reducing exposure to the high, I think it's high beta is the right word, the high beta stocks, the things that were really producing income in the U.S. markets. You borrow money in yen, you convert it to dollars, you go buy assets in dollars that are going to outperform the market. You make a bunch of money, but when your leverage gets crunched in yen, you've got to unwind quickly. That creates a big sell. We see it right here, and that spills over into global liquidity, which sucks out NVIDIA, sucks out AI plays, sucks out crypto. Crypto was the big tell to me. Everybody's like, oh, crypto seems to have some sort of data center exposure. No, it's because crypto was the #1 performing asset in 2024, and there's a lot of risk capital tied up in crypto. And when this happened, right here, that risk capital had to come out of crypto. Had to come out of AI. Be careful. All right? It's a house of cards we're built on. When the concentration is as low as it is, I mean, look at this. Stocks above their 200-day. We're at 61%. Yet we're sitting right at all-time highs. Why are only 61% of S&P 500 stocks above their 200-day? And we came off of 48% just a few days ago. 48%. That's crazy, right? Like, markets sit up here, all-time highs, and we're at 48% of the S&P 500 stocks are above their 200-day moving average. That means more than half of the market was down. Yet we're sitting at all-time highs. The concentration is just so narrow. That creates risk in the markets. Be careful. We want broad participation. We want it up here, but it's not. Be careful. I'm telling you, like, there's the warning signs have stacked up in the market. Probably near a top. And we could push it on up, but I think we're going below 4,000 before we go above 7,000. And I know it's a bold claim. I might be wrong. Been wrong before. Usually not on my big predictions like this, though. Be careful. I'm just throwing it out there. All right. Tesla earnings. I know some people are hyped up on this. Ready. Come on. Type a wrong character and it just jams it up. I love it. Cool. Well, let me get my spreadsheet while we're waiting on that to unjam. Unjamify. There we go. Let's check this out. Tesla earnings moves all the way back to 2015. So essentially the last 10 years. Average move is 13.6% down. Average percent of the time we drop, down. Since we popped last time, this is lowered to 70% of the time we drop. Average days to the bottom, 6. So if we get a drop, the average is 6, could last 12. These are trading days. Candles. The average percent move up is 41% when we pop. The average move down is 13.6. And the average reaction to Tesla earnings is negative 7%. All in. That's take every move we ever make. Last time it was like 128% up over 38 days. That's all factored in. The average move is down 7%. So what do you want to bet on for Tesla? Let's go to a clean chart just to, without all my stuff drawn on there. Tesla earnings. I've got the, we have candles turned off, maybe. Yeah, I did some candles, or did some drawings here on this chart. I forgot that I didn't reset it. Watermark. That's weird. Wonder why it doesn't show anything at all. No price, no nothing. Wow. Maybe I need to change this. Scales. Always visible. Yeah, cool. I've totally messed up this chart. Love it. Let's change it back to market roadmap. Leave. And there we go. So right here, just the basic, right? Very basic. What do we have? We have a first move down. Got the high and the low. We came up to a 618 resistance. 3 waves. 1, 2, 3 into that high. This looks like we might get continuation. I mean, just plain vanilla looking at it, might come down to the roadmap line. Average reaction, 7% down. That would put us average right there. And if we're moving down, the average move down is 13%, which puts us right about there on average. 338, which is getting darn close to the roadmap line. Of course, averages are averages. We could do 26%. We could do, outlier. It's like the average move up when we move up is 41%. But last time that was like 127%, 128% right there. The average move lasts like 6 days. That one lasted 38 days. This may come down to the roadmap line. Now, zooming out and looking at it further, we have the first move up, the retrace, the next move up, and here's the gotta hold line right here. Even if we correct more. So here's what I really want to see. We've got this first move up, got this retrace, got this next move up. We're in this current retrace. If we pull back even more, I want to see it hold here. And then we have the 5th wave move up if we're going to continue bullishness. Now that's inside this bigger move, which first move up. And let me turn off this right here. First move up. That's only 3 waves though. Next move down. Next move up. That projects it even bigger. So this is probably the 3rd wave inside this 1, 2, 3, 4, 5. And then this is, even bigger. 1, 2, 3, 4, 5. This move over here potentially projects us up into $1,000 area. We get the continuation off that. This is much bigger picture than just this earnings. Right now, this earnings, if we finish up this pattern, and this is getting closer, the current pattern, possibly top out around 587. And then if we're looking at this pattern with the potential to go a little deeper, yeah, 559 to 5, yeah, lines up with the bigger one there. So if we dip or if we rip, either way, probably gonna stop somewhere in this 560 area before we do another retrace. So a little bit of a coin flip. We don't know for sure what it's going to do. 70% of the time we drop, so step the sales. But if you're going to be crushed if you miss out on a pop, you got to be careful, all right? We could easily end up down here and then go ripping right up here. So if you can't handle the pullback, you should get out. If you can weather it, there's the potential. So potential like 70 point downside, followed by a ridiculous 240 point upside. All right, there you go. Does that look bullish? I mean, I just said that's the potential downside, so right there. It's definitely a long-term difference between what might happen today versus what's going to happen over the next couple of years. Today, that's what it looks like. Would not surprise me one bit to be right down here tomorrow when we open up. I mean, let's just be honest. That's the way that pattern looks right there. Despite holding shares and everything. Microsoft, being a little soft here. That's where I expected. Now we could go right back down to the bottom. Much smaller range here. We're only talking 40 points between supports and the target. Meta. It could pop. We've seen it before, but at this point, the downside looks very risky. If you're betting on a bigger pop, I would be very, very careful here on Meta. Very, very careful on Meta. Now, Meta and Tesla are only in the single trillion club. They're not in the trace trillions club. They're in the uno trillions club. Right there. They're in the trace commas club, but not in the... They're going to need... going to need more money to climb the ladder. They can both go higher. Now, looking up here, these big dogs up here, they're in the $3 trillion club. What does it take to go higher? It takes a lot of trillions of dollars. It takes $3.1 trillion to double that one. It takes $3.2 trillion to double that one. It takes $3.4 trillion to double that one. That's a lot of money. Be careful. Downside is easier when you're up here. Downside is always easier when you're in the $1 trillion club, actually. So when you look at this, everything that's more than $1 trillion from Berkshire Hathaway up, easier to go down than it is to up. Walmart can still double pretty easily and just be in the $1.5 trillion club. So just keep it in mind when you look at this. All right, I go pull the gainers. That's everything moving $2 or more up, put it on the gainers list. Everything moving $2 or more down in the pre-market and put it on the decliners list. And we hunt for opportunities. ASML popping today, but I think we're still potentially hunting the bottom. This was a nice deep retrace to a higher low right there. Nice little pop here. We did reject the roadmap line right there. This looks best if we make that lower low right down there around 610, 600, 610, somewhere in there. Looks best, and I'm probably not interested in any position until we do that. And if we just break out over here, I'll think about it, but lower high, lower high, lower high, basically the same. Lower lows along the way. this finishes up, it kind of completes the pattern. Like this was an ideal spot, but we went a little bit deeper and kind of set the odds we might go down and retest the top of this consolidation down here, which is why that $600 target is there. I want to see that right there. Just that gives me a better feeling that we can make a bottom. FFIV, big spike, and giving it back pretty quickly on the earnings pop. Beating on the top, beating on the bottom, hit the upside target, and give it back. That can come all the way back down. Retest the breakouts right there around that 250 area, and then climb on higher. Eat. It's Brinker. I've done work for Brinker in the past. Next target up 213. T-Mobile. Oh, baby. Nice. Really nice. Look at that. I was mentioning the opportunity here. I did not take it, but I went with the XOVR instead of T-Mobile. This is a play on Starlink and T-Mobile partnership. Rocking and rolling. They're basically going to have global coverage on any normal cell phone, T-Mobile cell phone. You can go anywhere in the world and have text and voice, maybe even data when they get the satellite system up through Starlink. That's a pretty cool deal. Awesome technology. Nobody else really has it. So that's giant upside potential there. Really strong for T-Mobile, I feel like. But I'm in it this way. Damn. Dang, 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 dang. There we go. Playing with it this way. Why? Because they have a like 7% of this fund, or 8%, or I don't know, whatever it is. No, 9%. 9% of this fund is tied up in SpaceX private equity. That's pretty cool. That's like, I do these occasionally where I put a few $1,000s into something that's new, upcoming technology, and let it ride. I think SpaceX is one to bet on, but you know, you can make your own decision. Yeah, the best trade I ever did, you know, it's not the $850,000 trade. Best trade I ever did. I bought something called Red Hat Linux for $3 in 2001 on the back of the .com bust. Sold those shares to IBM for $190 a share in 2019 or 2018, 2019, whenever IBM bought out Red Hat. That was the best trade I ever did. Held it for that long. Sold calls on the upside against it. It's a wild ride along the way. I learned a lot along the way. Made money for me, made money for my dad. Kind of got the accounts started that way. So there's kind of the resistance. If we can pop, we've got, I mean, there's support, there's resistance. Target up here on KLAC. NXT. I've done like, I probably hit 1 out of every 10 technology plays I do. So XOVR is another technology play. I might hit it, might not. It's one of those, you put the money in and let it go. There's no stop on it, in other words. Next tracker. Potential resistance right there if we get above it. Actually, it's going to be higher. Now we pull this down. If we can close above here, that's the target, 68. Learn. Ridiculous pop. Probably going to retrace Monday. Clean this back up. Here's the high. Here's the low. And wrong are your favorite Crocs. Need a close above that 618 to go higher. 346. Reddit. Be careful. It's like Icarus flying to the sun. The wax wings are going to melt, and we're going to get the retrace. How high? Maybe 264. DJT. Chopping around, sitting on the roadmap line, not looking very bullish. I think this needs another flush down to here before it's ready again. We got close right there. Needs to come down in this zone right there. AMAT. That needs to finish up the correction. Warrants on DJT. That could hold the roadmap line. Like, this one doesn't look as bearish, but it also did not break above. It did get a close, but it couldn't maintain it. It sold off really quickly. Now, if it holds here, turns back up through, it's probably coming right up here on the warrants. The warrants seem to be more favorable than the underlying DJT stock right there. And if you don't understand warrants, you should go look at Investopedia and find out more about what warrants are and how they trade. SAP, we need to look at the New York version, not the... Yeah, that's just keeps being ridiculous on the upside. Be careful. It's going to retrace. FSLR. I'm a trend pullback continuation trader, so if it's just ripping, trend, no pullback, there's no opportunity. My opportunity strikes when we get a pullback to a support level, like FSLR here. Cha-ching. We got it, baby. Finally. Now we need to see it break back up through the roadmap line. Back up through what'll be the 618, which we need to pull down to that low. That level right there. This thing can rip. Like, could you buy now? You could. Stop below the low. It might continue going down. I mean, this could make a lowest low possible. Opportunity to buy now. Upside target 337 area up there right now. See what the twists and turns say as we go. Starbucks, that's probably a long-term trade. Probably 2030s maybe. Maybe late 2020s. Oh, yes, baby. Go. Go, go, go. The target's up here at 140. Nice. Beating on the top, beating on the bottom. New CEO, paying off. I bought calls down here, and I'm sitting on 2026 calls. I think it's either 90 or 100 strike. I don't remember which one it is. It's been too many months now. Looking for the 140. That's going to be a big pair. VRT, back to the roadmap line. If we break above the 618, 166, LOGI. Yeah, Starbucks is back to that trend pullback continuation thing. Trend pullback continuation. Hard to see, but there was a lot of planning went involved in that. VRT, break above the gap down. Nasty. Nasty, nasty, nasty. Break back above the 130. Looking for 166, 176. LOGI. Logitech. So in this big sideways choppiness, I kind of expect it to drop again, but it could break out above this high here and go cruising right on up to 168. Baba announcing they have some crazy AI thing. They're going to compete with DeepSeek, but, you know, their actual announcement is against DeepSeek's older model, not their current model. And, you know, funny enough, when you look at what China's doing, they're doing what China does best. They're cheating. How are they cheating? You know, everybody's been asking me all week, like, JT, is it legit? How are they actually doing this? I think I finally figured it out after reading some stuff in, I don't even remember what it's called, the place I was reading. Golly. It's like data, what is it, 4 data science or something like that. What they suspect DeepSeek did was distill, what's called distilling. It's where you program an AI training model, like you have the AI model, then you have a model to train the AI, and they program the AI training model to ask ChatGPT questions, like millions of questions, and then feed the question and the answer into the model that DeepSeek built. So they used, best I could tell, they used, you know, they did several subscriptions to ChatGPT, asked it a millions of questions and fed that training data into DeepSeek. So DeepSeek's kind of trained on ChatGPT. So Baba might be doing the same thing. It's an interesting, it's called distilling is the terminology that they use. That's what they suspect that DeepSeek did to train their model so cheaply and efficiently. And why it's so good with such smaller models. Why it can run so efficiently. Because it's basically been trained with the best of the best data off, distilling it off of a existing large language model. Interesting, right? How many people knew that? Learned something new? Let me know in the chat. That's why it's a suspect model at this point. We'll see as information unfolds. So I have no, like I was running a 70 billion parameter model on my other fast computer that I use to train my own AI model. YETH, that's just China Chapin. That's a covered call strategy on Ethereum. Adjusted basis, it's rocking and rolling. Otherwise sideways. GLW, Owings Coring, made the higher high and coming back to roadmap line. Flex, probably coming back to the roadmap line. TM, be careful. That was a proportional high and can result in this making a lower low. That was 1, 2, 3 up to a classic resistance point. Down will be the bias, probably somewhere around 150 for support on Toyota. Now it can turn and burn and go higher here. If we hold the uptrend of lows that we've got intact, if we hold that, still bias up, but it's a cautionary point right here. Caution, caution. The red lights are flashing. CLS probably coming back to the roadmap line. PCAR sitting on the roadmap line. This has a bullish inclination to 130. As long as we can hold the uptrend of lows. As long as we hold above that, still 131 area. TSM, potential to have bounced. Rock and roll, next higher targets, 232, 238. LRCX. Watch for that to drop down to lower low. TLN. That could be the low on this bounce, but that has a large gap in there. Don't like it. Don't like it at all. That can reject and come down to the roadmap line. TER. That really needs to drop on down. This would look best with that drop right there. Decliners, man H. Now look at that. That's why I warn, like when we get up here, you got to be careful. That first right there, beautiful correction. That could be done now that we retraced down into the depths here. That may set up the next move. It's going to take a lot of effort to get back higher. You can look at the smaller time frames for an entry, but then stop out below the low because it could go deeper. LII, Linux International, back to the roadmap line, looks likely. DHR, chopping around here. Rejected off the 618. Heading on down. How low can she go? Potentially down to 180. Another 50 points down. Missed on the top, beat on the bottom. Getting punished. Not looking too strong there. First move down, retrace. It might find some support right around 200. Bounce again and cruise on down here to 180. GED, General Dynamics. Still hunting the bottom. It overlapped that. That creates uncertainty for me that we overlapped. Don't like overlap. That may go deeper over the coming days. Apple reports earnings tomorrow after the close. Looks like a pretty solid bounce. We may see Apple outperform to the upside. I may actually take a call on that 262, 2, or maybe play it this way. I might play it this way. Looking for 42 on the upside with shares. I play this with shares if I was going to play it. Corvo. Watch out for the drop. VST. Potential bounce, but I really want to see that hit the roadmap line. BKKT. Ooh. What if their deal with DJT's falling apart? That's what that looks like. Watch out for that to break down below the roadmap line and plummet into the abyss. That was 3 waves up. Data dog. Potential to have bounced, but it also missed the roadmap line. So it may go for another move down. That was resistance. Watch out. LC, Lending Club. Complete garbage company. Complete garbage. I did P2P lending with Lending Club for a number of years and never made jack squat. Just churned a bunch of money, paid some taxes because of the way they reported the earnings. And that looks like it's a big downtrend. That's probably going to go that way. DXF is a dumpster fire with the reverse split in there. It's hiding in the background there. I see you. Right there. Yeah, be careful. Don't mess with that. NVIDIA, caution. NVIDIA, caution. We're holding the roadmap line. If we can't break back above that high yesterday, this thing can flush right down in here. You argue with me all you want. Has the potential, and we've talked about it for over a year. I've said it over and over and over. VSCO, probably going to hit the roadmap line. NVDL, indicating 27, 28, 29. NDAQ, watch for the drop. I'm not going to throw out a bonus trade today because it's a cautionary day. Be careful today, please, for the love of your account. Please be careful. Things are very unclear today. FOMC, Tesla, Meta, Microsoft. It's a gambling day. Gambling day in the markets. Be careful. I'm not sure I would get into anything new. Opportunity presents tomorrow. Today, besides, potential for Apple earnings tomorrow, and I'd probably wait till tomorrow to get into it because that's after the close tomorrow. We can see what happens today. This may pull back and make Apple look horrible. There's the downside target down here, roadmap line. Upside target right up here. Risk is bigger to the downside, but we are above the, all the things I said, above the downtrend of highs. We broke out, we retested, we're above it. Gives, 55% upside, 45% downside. That's where I'm at with it. A little bit of a coin flip. And we could break out in a big way because we've consolidated for, golly, we've been consolidating since July. When you look at NASDAQ right here, look, we've been consolidating since July. A little bit lower, a little bit higher. That's a consolidation for 6 months. We're winding it up, cranking the spring. Eventually it's going to pop. I think we could get a blow off top, and that may be the ultimate top. We could see this go and then roll. Is it today? Is it tomorrow? Is it next week? Is it next month? I don't know. We could wind the clock. I mean, we could keep winding it. This could keep winding up for another couple months. We could wind it up till May and then pop and then drop. I don't know. It's unclear. I'm usually pretty good at this, predicting which way we're going to go. This doesn't give me the warm fuzzy. And we may, because of the number of times we've retested NASDAQ, maybe indicating, like I said, this is a little more sour grapes. Might be indicating we need that. Russell, definitely indicating we have more potential downside. So be careful, please. Be careful, be careful. 2 p.m., channel members, come see me, come hang out. I'll put up the live stream. Otherwise, have a great day. See you again tomorrow. Same bat time, same bat channel, 9:15 tomorrow. Do it all again. Hunt for some awesome stuff.